all the repairs after taxes. So they just wanted the repairs. They didn't want the car cost. Okay, sorry. So I have to do $85 and $25 and $45 and labor. Okay, so I'm going to subtotal all that up. And I'm going to get 85 plus 25 plus 45 plus 120. I get 275, okay, before tax. But then my taxes for labor and materials is both taxes, right? So that's the 12%. Okay. So I get $308. Okay, so that's the answer to part A, because what we learned in the lesson 2 of this unit were that any repairs, any equipment that you needed to repair, or labor, that those are taxable, both taxes, PST, GST. Okay, so that's why they're asking us to do that one separately. Part B now is the book value is $2,250. The purchase price is $2,500. Calculate the total cost if he goes ahead with all repairs. Okay, so what happens is I have to find out the PST. The PST is always calculated on the highest value. So I have 2,500 times 0.07, which is $175. This is the PST charged. Okay, so now we've got the total cost of the car. Total cost of car. These are very confusing, right? Because of all the different taxes. So I've got the cost of the car itself, right? This is the cost of car. And then I got my 175, and that's the PST. And then I have all the, then I have all the repairs. And all the repairs are 308. Okay, so 2983. This is the final cost. Okay, sorry about that, Tiana. And which other one? Number 6? Yes. Okay. Number 6. Lenore sees a used car sold privately for $1,200 and wants to buy it for her son. She pays $50 for a complete vehicle inspection and finds the vehicle needs $2,500 worth of repairs. The book value is $1,500. Calculate the total amount she pays for the car, the repairs, the safety inspection after all taxes. Okay, we've got lots going on here, right? Let's see. Let's find the cost of the car, because she has to pay for that, right? Cost of car is $1,200. The book value is $1,500, though. So I have to make sure I remember there's a difference between what she paid and the book value. Okay, so the cost of the car is $1,200 for sure, but the PST, that's going to be different, right? That's going to be $1,500 times 0.07. Because PST is always charged on the larger amount. And that's going to be $105. Okay. She pays $50 for inspection. Now, that's the safety inspection. It actually should have had the words, safety inspection. Was a little confusing, but vehicle inspection is the safety inspection. I think they use the word safety a little later in the question. And that is, safety is no PST, but a GST is charged, okay? So the safety inspection is $50. So this is the safety. So the safety inspection, it's $50 times 1.05 because it's GST only. So I get $52.50. Now, the reason I'm putting the 1 in front of this one, Tiana, as we go on, I'm just putting the 1 so it subtotals it. Why I couldn't put the 1 here is because the tax was charged on a different cost, right? So when you have a different book value and sale value, you have to do it separately like that. Okay, then I have the repairs. Now, repairs are $2,500, but they are both taxes, right? So that gives me $2,800. Okay, so have I done everything? I've got the cost of the car, the safety, the repairs, value of the car. Okay, that should be it. Now I should just have to subtotal everything. So I get $4,157.50. So this is the final cost. This is definitely the lesson where you have to be super organized. Buying a used car, because new cars won't have repairs, or they shouldn't have to be safetied and there will be no repair, right? When you buy a new car, it's already been safetied at the factory and there should be no repairs. If your new car needed repairs, you'd have to just take it back. But it's just the used cars that are there's so many pieces to them. Okay, does that help you out?
Yes.
Okay, vehicle loans we did yesterday, right? Cynthia, so now let's try, were there any questions on assignment 6?
No, I checked my work.
And everything's good?
Yes.
Okay. So let's talk about, and again, you can do that at home, Tiana, and then just email me questions or slide into the live chat every day you could talk to me directly, right, from 12 to 1. And again, it's just right here, right? I'm just going to slide it back here so you can kind of see it. So you would just type something into me. Now you do have to have a YouTube account, but that's easy. You just apply for them. But you could just say, like, hi, Kim, right? Hope like all is well. Okay, but you could just send me a little, and then just send the arrow button. You can just send me questions saying, I just didn't get number 5. And then I would, after I did the lesson of the day, I would just go over number 5 again for you, okay? Okay, so let's talk about leasing. This is it. This is the last way that we can get access to a vehicle. Once again, I can purchase a vehicle, and there's many ways I can purchase it, right? I can purchase it new from a dealer, used from a dealer, or used from a private citizen. And I can also lease. It's a little like renting, but we don't say renting for cars in this capacity because I can also rent a car. There is a third option for having a vehicle. You can rent a car. That's usually what people do if they go on a holiday somewhere and they're just going to be somewhere for a short period of time. Renting a car is much more expensive than purchasing or leasing. Again, because you're renting a vehicle for such a short term. So if you were in the market and you didn't want to purchase a vehicle, then leasing is the way to go. Like you wouldn't rent a car long term because the rates are much higher than for leasing. So many people lease rather than buy. When you lease a vehicle, you pay a specific amount each month for a set period of time. A down payment may be required, so just keep that in mind. At the end of the lease, you can return the vehicle to the dealer, or you can buy the vehicle at what's called a residual price. Now, why do people lease cars? Any idea? Have you ever leased a car, Cynthia? And Tiana, you haven't? No. People lease vehicles for a couple of reasons, I think. Some people who are in like sales and they do lots and lots of traveling, they put a lot of miles on a vehicle every day, every week, every month. So they might choose to lease a vehicle because then they can just take it back after 2 or 3 years and get a new lease for a new vehicle. So they're always kind of driving a new vehicle, which if you drive every day, it's important to have a vehicle you can rely on, right? So that's one reason for leasing. And typically people like that, or if you're self-employed and you need a vehicle to get around in, you can use some of those lease costs as a tax savings. Like you can submit some of your bills and you get a tax credit for that because it's part of your job. It's an expense of your job. Some people just really like driving a new vehicle all the time. So they'll lease a vehicle for a couple of years, take it back to the dealer, the car dealer, and then lease a brand new one. So they always have a new vehicle without having to buy a new vehicle, right? In the long run, leasing is usually more expensive than just buying a used vehicle, okay? So state advantage or disadvantage, well, we just kind of said leasing a car, you can always then drive a newer model. A newer model of car. A disadvantage is it's more expensive than purchasing. Then purchasing, like especially if you're purchasing a used vehicle. You can get great deals on used cars. Buying a car, advantage is you don't have a set number of kilometers that you can drive per month. That's another thing about leased vehicles. When you lease a car, you're leasing from a dealership and you have to pay a certain amount every month, but they'll also limit how many kilometers you can drive. If you go over that limit, you may have to pay them like a penalty. Purchasing a car, disadvantages, it might be more expensive for monthly payments. Especially if you purchase like a really expensive one, it might be more expensive for monthly payments. You might be stuck with a car that you don't really like. You might be stuck. Meaning, a leased vehicle, remember leases only last 2 or 3 years. So if you hate the car you're driving or leasing, you can just take it in and get a different model, right? It's easier to change up things. Let's go back to this statement too. You can, after the lease is over, you can return the vehicle to the dealer or you can buy out the car. So that sounds kind of funny. Like, why would someone lease the car and then want to buy it out? Any ideas? Yeah. If you really, really like the car, then you can keep it. So you might think, oh, they should have just bought it at the beginning, but sometimes they don't know that they really love the car. A lot of times too, I know this has happened to me, to people that I know, they were salespeople, so their company leased the car for them. So the company leased the car and paid the lease payment. So they drove it for 2 or 3 years. When it was time to go return it to the dealer, they returned to the dealer, they got a new car from their company, but they ended up buying out that car for their own private car at the end of the lease. So they ended up with 2 cars at the end, right? The new one their company leased, but they bought out the old one just because they happened to really like the car and they got used to it. Okay, any questions about leasing? Okay, calculating a lease payment. It's going to be very similar to, it's going to look similar to just the monthly payment you had if you borrowed money for the car. You see a commercial on TV that shows you can lease a 2019 Toyota Corolla hatchback for $0 down payment and $276 a month. Calculate the monthly lease payments after taxes. Let's see if the table tells us anything about leasing. And I think it did. How many pages do I have to go back? Thanks. Bless you. There was something on leasing. Nope. Okay. So leasing a car, if this is the before tax, both taxes are charged. Okay, so I've got 276 times 1.12. And that's going to be $309.12 is the lease cost. So that's easy enough, right? It's going to be a monthly payment, just like our monthly mortgage payments and our monthly loan payments. Like if we wanted to borrow money to buy a car. So just ask questions if you have any. Next one. Peggy's going to lease a new Kia Sorento. The lease payment is $249 per month, but a down payment of $2,999 is also required. Calculate the total amount she will pay to lease this vehicle. Okay. I'm just wondering how long she's renting it for.
Is there a typical lease?
No, I think there's a piece missing from this question, everyone. Let's say she's going to lease the Kia Sorento for 3 years. Okay? There should be an extra piece of info in here. Okay. The lease payment is $249 per month and a down payment of $2,999. So I have to take this $249 first and multiply by 1.12, right? And that's going to give me $278.88. And this is the after-tax cost of the lease payment. All right. So calculate the total amount that she's going to pay to lease this vehicle. So what am I going to do here? I'm going to take this amount, this monthly amount, and I'm going to multiply it by what? How many months in a year?
36. No, once a year.
Yeah.
Once a year, 3 years.
Yeah. So you could multiply by 36, or it's just like we did for mortgages, right? Times 12 months a year, times 3 years. And this is going to give me the total amount of the lease payments, which is $10,039.68. So this is the total of the lease payments. And then what else did she have to pay? They also made her make a down payment, right? $2,999. And that gives us a grand total of $13,038.68. So this is the total cost to lease. To lease for 3 years. Now that doesn't sound so bad, right? You're thinking, that's not so bad. But that's just leasing the car for 3 years. What happens at the end of those 3 years, at the end of the 36 months? Right? Or take the car back and be without a car, right? This only gave her use of the car for 3 years. At the end of the 3 years, she's without a car. So some people don't like that idea of leasing because they think, well, I paid $13,000 and then I have to take the car back. I have nothing to show for it. But on the flip side, you can think, well, of course you have something to show for it. That car got you to work and back or school and back, right? If you didn't have that car, you would have had to pay all of that in bus fees or taxi fares, right? Or Uber fares. So that $13,000 allowed her to be, that was her transportation cost for 3 years. So again, it depends on how you look at things. Let's keep going on. Now we're going to talk about something called residual value. So this was referred to in the opening paragraph because now, as Cynthia said, she does have another option. Her other option is, hey, I really want to keep this car. I love it. It's my favorite car I've ever driven. So she still has to go back to the dealer, but at the end of the 3 years, she says to the dealer, hey, I want to purchase this car. So let's see, they have to give her a residual price. It had an original price of $28,480. That was the brand new cost. The residual value at the end of the lease is 60% of the original price. Determine the residual value. Okay, so 60% of 480 equals $17,088. Okay. So check your numbers and make sure you get that. Now it says, this is the residual value. So now she wants to purchase the vehicle at the end of the lease, calculate the price she pays after taxes. Okay, so the after-tax cost will be $17,088. This is all done through a dealer, right? Only dealers can lease cars to you. So that means if she wants to purchase anything from a dealer, it's always both taxes. Okay. And then last part, I think it's the same question. Calculate the total cost to Peggy, the same lady, if she leases the Kia Sorento and then purchases the vehicle at the end of the lease. That's just summarizing all the work we've done. So if you look at these examples we've done on this page, first she leased it for 3 years, then she purchased it. What's that total cost? Okay, well, there's two costs here, or two main costs that we've summarized already. Cost to lease, cost to purchase at the end of the lease. Okay, so the total cost to lease was $13,038.68. And then the cost to purchase at the end was $19,138.56. And the total of these two costs is $32,177.24. Now, what do you think about that? Well, let's look at the original. What was the original price of the car? It was $28,480. Now, I think that was probably before tax. If we do if we add the tax onto it, the original cost of the car would have been $31,897. The cost to lease, if we did it for 3 years, was, and then purchase at the end was $32,000. I don't know if you guys can see this. There's not that much of a difference between these two, right? It's very minimal. It's only a couple $100. So in the end, yes, it's always a little more expensive to lease the vehicle, but in this circumstance, maybe it wasn't such a bad idea to lease the vehicle for a couple years, then buy it. You do end up spending a little more money, but that allowed you to test the car out, right? And to figure out if it was a lemon or not, or you really liked it, or if it was big enough for your family. Anyway, I know I'm kind of moving through this fast, but I thought, well, maybe we'll try and get this lesson done. Do you want me to go over the last example with you guys? What do you think? Tiana, what about you? Do you want me to do this last one, or do you want me to save it for tomorrow? We'll make a decision. Do it? Okay. Finish it up. All right, last example. It's huge. Comparing the cost of purchase being cost of lease. We actually just did that, didn't we? Except we're going to do it all over again. So this will really cement that in your head. Okay, she's looking to buy or lease a GMC Terrain. The cost to purchase is $34,804. The cost to lease is, I'm just going to highlight all my things. This is the cost of the vehicle. She also has an option. She can lease it for 48 months. The residual value, the down payment is this. Okay, if she chooses to purchase the car, she can get a loan from the bank. She can do a monthly payment of $644.57. How much will she pay back to the bank over the term of the loan? Okay, so she'll pay the $644 per month, and she has to multiply by 5 years. So times 12 times 5, $644.57. Okay, either way. Oh, and she's got this down payment of $2,560. Okay, so the total cost to lease the vehicle. Oh, hang on a sec. I think this is. Okay, sorry, now this is leasing the vehicle. I get it now. Okay, so to lease the vehicle would be $339 times 1.112 to get the after-tax cost of the lease payment. Is this $379.68 is the total lease payment. Per month. Okay, now the total cost to lease. So I have $379.68 times 12 times 48 months. Sorry, not times 12 times 48. Sorry, they just gave it to me as the number amount. times 48 equals 18224.64 plus the down payment 2560, and I get 20784.64. Okay, so this is the cost to lease. Right? And this is the cost to buy, using a bank loan. Okay, so the residual value is 70% of the original. The original value is 30,800 times 0.70 equals 21560. And then I'm gonna multiply, add my taxes in. So I get 2414720. This is the price to buy after the lease. Okay, what is the total cost if she leases then purchases? Okay, well, it's these two numbers, 2078464 and 2414720. And we get 44931.84. Okay. This is the cost to lease, then purchase the car. Okay. Calculate the extra cost if she leases and purchases the car as opposed to purchasing the car outright. I guess purchasing the car outright, buy the car outright. I got 34,804 times 1.12. Oh, sorry, that is after taxes, sorry. So purchasing the car outright is 34,804. That's just from the opening question, the opening info in the question. Lease then buy is 44931.84. So the difference is, I'm just going to subtract these two. $10,127.84. Okay, what do you think about that difference? In the last example we did, the difference between buying the car outright and purchasing, and then leasing, then buying, it was just, I don't know, $400, right? What do you think about this decision? If she could have bought the truck outright for $34,000, $34,800. If she did it the other way, she leased it, then purchased, it was $44,000. It's a difference of over $10,000. What do you think about that, this scenario?
It's absolutely unconscionable.
It's it's a big difference this time, right? I think the couple $100 is okay, but paying $10,000 more, you could buy 2 used cars for $10,000, right? So I don't know. This one seems quite a bit too high or too much of a difference. State 2 reasons why a person might lease then buy. Well, we just said it gives them a chance to decide if they like the car. The other reason is they might get a tax, or they might be able to claim some lease costs on their income tax. Okay, so if they were leasing the car for their job, they can actually claim some of those costs that it cost them to lease the vehicle, and it would reduce the amount of income tax that they would have to pay. Right, but there's only certain situations where you can do that. You have to have that vehicle like registered as a work vehicle, and you're generating income from that. Okay, I know that was a lot to load on you all, but at least we've got all the examples for vehicle finance now done and recorded. I'll post the hard, so that'll be it for the streaming.